Are you ready to try your hand at placing your very first stock trade? Then check out our free guide, 10 Steps to Choosing Your First Stock to Trade, the Ultimate Beginner's Guide. In this free download, you'll learn how to choose the right kinds of stocks and how to find them, know when to buy your stocks and when to sell them, and you'll learn how to take your very first steps to becoming a stock trader and much more. Grab your free guide now by going to TRADEway.com/guide. That's TRADEway.com/guide. Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing. Hey guys, welcome back to the podcast. We're going to do a stock market show today, so let's talk about two of the most important things: excellent buy points and good sell points. What are they and how do they work? So a lot of people don't know about this really, and so their trading is suspect at best. In fact, a lot of people think they can get up in the morning, get on the internet, place a trade, and run off to work and live happily ever after. But guess what? That's not going to work over a 3-year period of time because you need skill sets. The reason is you got to get the math on your side. That's what the big boys on Wall Street do, and that's what you need to do. So we're going to share with you some of those skill sets. A great starting place is to learn what good buy and sell points are and how they work and why they're important. Well, let's start with this. There are some really recognizable patterns that different stocks make out there. I mean, there are books 3 inches thick written about patterns and things like that out there that you can buy. The thing is, a lot of those old patterns don't work anymore because things changed with the internet. All of a sudden, the volume was a lot higher. A whole lot more people were trading. And so some of the old patterns didn't work, but some of them still do. And at TRADEway, we talk about all these patterns that still have potential to work. And so I'm going to just mention a few of those now, and we don't have time to go into all these, but just make you aware of them. And as we talk about this, what I want you to understand is that each pattern has its own perfect buy point, and sometimes you can know the good sell points, but I'll tell you, sell points are more difficult in some cases. We'll talk about that a little bit later. But let's talk about some of these patterns. First of all, there's one called a cup and handle, and I know that sounds kind of funny. Probably not as funny as the saucer and handle, but they're kind of similar. The saucer and handle takes more time to develop, but basically what happens is a stock is in an uptrend, and all of a sudden it sort of starts to move down and moves down for maybe 6 to 8 weeks and then starts to move back up. And when you look at it on a chart, it looks like the shape of a cup, like a coffee cup. And then all of a sudden, it takes another little move down for maybe 7 to 10 days, and then it just takes off and shoots to the moon. And that little move down is the handle on the cup or the saucer, whatever the case is. So it literally looks like a cup and handle. Now, that pattern is fantastic in a bull market. So if you've been in like the first year of a new bull market or the second or even the third year of a bull market, you need to watch for those because they're really powerful. Now, there's a perfect spot on that cup and handle after the handle is made where we find the perfect buy point. And all of these patterns I'm going to discuss have a perfect buy point. And you need to go out to TRADEway.com and check out our education tab for details on all these patterns and where the perfect buy and sell points are, because the scope of this show doesn't allow us to cover all these patterns. But you can certainly learn them if you go out to TRADEway.com. Now, some of the best patterns are an uptrend, but a specific type of uptrend called a flag pattern. And there's also stair-step patterns. They're very similar, and sometimes the flags and the stairs sort of morph back and forth into each other. It doesn't even matter, but they have a perfect buy point as well. And then you have a thing called a flat base, where a stock is trending up for maybe quite some period of time, several months, and it just takes a rest and it goes straight sideways. And then it may do that flat base for 3 or 4 or 5, 6, 7, 8 weeks. And all of a sudden it takes an explosive move up from that flat base. And then we have W's and M's, and they look just like they sound. A W is a pattern that indicates a bullish move is about to happen, and you can remember that because W stands for win. And then an M is a sign of a bearish move. You can remember that because M stands for murder. If you're in a stock and it makes an M, you're about to get murdered. So you need to stop that one out, right? And then we have something called head and shoulders, and that's one of the great bear signals. If you like buying puts, if you remember from previous shows, puts are options that give you potential to make money on the way down. And if you're wanting to do a put, look for a head and shoulder pattern. And then we have a thing called a kiss goodbye, which is really when an uptrend turns into a downtrend. It will usually make a brief move back up to an important moving average and then bounce down and really move down for a put pattern there. And it's one of the most predictable patterns we have. And it's for a bearish move, so you would be doing puts with that kiss goodbye pattern. And then we have uptrends, and we have downtrends, and we have rolling stocks. So all of these tend to have their own perfect buy points and good sell points. And like I said, if you go out to TRADEway.com and you check out the education tab, we have various different courses you can take both live and online and learn these different patterns and the perfect buy and sell points. For today, I just want to discuss maybe a couple of them, like the rolling stocks and the uptrending patterns. Now remember, flags and stair steps are a specific type of uptrend, but I'm just going to say in general, just a stock that's slanting upwards. Its price points are getting higher and higher. And remember, they never just go straight up. They zigzag up in an upward movement. In fact, they look kind of like a rolling stock, which is going sideways. If you turned your head sideways and you saw this uptrend, it still has these little rolls. It's just that the whole thing is making higher and higher stock prices as they go. So let's talk about the rolling stocks and the uptrending pattern and where those buy points and sell points would be. In fact, with those, the sell points are pretty easy. Sometimes with the cup and handle or the saucer and handle, different patterns like that, it's kind of hard to know where to sell because there's nothing in the history of the stock that would indicate where the thing's going to stop going up once it starts going up. So there are different things you can do for that, but we're not going to talk about those today. With the rolling pattern and the uptrending pattern, both the buy and sell points are pretty easy to determine, but they're really important. In fact, you should determine that before you enter the play. All right, so let's talk about the rolling stock first. Now, you can visualize this. Imagine a stock that's going sideways, and yet it does that in a channel. So we call that a rolling stock. So if you look at the bottoms that it makes on the lowest price points, if you can line those up with a horizontal line, that's what we're going to call the support line. And if you look at the highs, and the best you can line those up in a straight horizontal line that is parallel to the support line, and we'll call that the resistance line. So what happens is that stock tends to move down and hit that support line and bounce up. And then it'll tend to move all the way up to the resistance line over a period of maybe 2 weeks to 3 weeks. And when it hits that resistance line, it turns back down and rolls right back down to the support line. So that's one of the first patterns we usually teach brand new students because it's easy to recognize, but the buy and sell points are kind of easy because what you do is you let that stock move down and hit that support line and bounce up slightly to prove that it actually is going to bounce again, and that's your buy point. So you want to buy that stock as close to that support line as you can, but it has to bounce up a little bit before you buy it. You never want to buy a stock going down. Make sure it bounces up, it's moving up, and there you buy it as close to that line as possible. That is the perfect buy point. The perfect sell point would be shortly before it hits the resistance line. Well, why do you think we would say sell it before it hits that line? Well, that resistance line actually is the place where the big boys on Wall Street sell or short the stock. And sometimes when they do that, it can move down so briskly that you can't get out in time. So it's better for you to get out a little bit before they're going to get out. So you need to maybe draw a second line a little bit lower than that resistance line. Just ooch it down a little bit, and we'll call that the sell line. And when your stock hits that sell line, sell it. And that way you're out before the big boys get out. So there you have your perfect buy point and your perfect sell point for a rolling stock. Now, an uptrending stock is similar. It's almost like you just turn your head sideways because it looks like a rolling stock if you do that. But instead of being horizontal lines, these are going to be up slanting lines. and you're going to find several bottoms on that uptrend and connect them, and that'll be your support line, but it'll be slanting upwards. And then you'll find several tops and connect those and make sure those two lines are parallel, but they're both slanting upwards. And that creates a channel where that stock moves up and down between the two lines, the support and resistance lines, but it's continually slanting upward. That's really a better pattern than the rolling stock even, because it just has potential to make more money over time. And the good news is most stocks want to trend upward. I mean, think about it. Everybody wants that stock moving up. The president of the United States wants it moving up. The president of that company wants it moving up. All the stockholders want it to move up. And all of Wall Street wants it to move up. And so everybody's trying to push those stocks up. Tends to make them want to do these uptrending moves. So what's cool about it is once you know how to do the buy point and the sell point for a rolling stock, you do it the same way on this uptrending stock. You let that stock roll down and hit that support line and bounce up just a little bit and buy it right off that support line, as close to it as you can get it after it's proven it's bouncing up again. And then you might want to take that top line, the resistance line, and just ooch down a little bit and draw a second line and call that your trading line, and get out before it hits the resistance line, because you want to get out before the big boys get out. Now, here's the thing. If you could picture all of that, and you say, okay, now we know how to do great buy points and great sell points, you might want to ask the question, why is it important to do that? Well, a couple of things here. Number one, you got to play the math. So one of the keys to that seems awfully simple, and it is simple, but it's more difficult to do because we're emotional creatures, and we have these things called pride and fear, right? And those two emotions interfere with our trading. And you can say that you get a little bit greedy on the one side or you get fearful on the other. Either emotion can hurt your trading. So we set up rules to sort of minimize those problems, because you can't change your nature. You're human. You're going to cheat. You're going to tend to want to cheat. So we just set up rules before we even get into the play and just stick to the rules. And here's a really simple rule. First of all, make sure you get a really good buy point, and that is near the support line, but just after it bounces up off of it, but still close to it. If it moves up, several dollars above that, it's too late to do that play. Just skip it and go find another stock, because if you get into a sell point that's higher than the support line and you do that over a period of 3 years, you're going to lose on a lot of stocks, and your stop outs are going to be a lot worse, a lot more costly, because you had a bad buy point. So one of the things is that you want to get that good buy point so that if you do stop out, if the play doesn't work like you thought and it moves down instead of going up, your stop out will be smaller. And so that is key, because here's the math. You want to win by at least 35% or so if it moves in your direction. And if you lose, don't ever call yourself a loser. Just call it an expense. I mean, because you don't expect them all to work anyway, right? The best analysis you can do, you're not going to get them all right. So when they go the wrong way, you want to lose about 8% on a stock. So think about that math. If you could win 35% every time you get it right and only lose 8% when you get it wrong, you don't even have to get it right maybe a little more than half the time, and you can make money. So if you could get, say, 6 or 7 times out of 10 and get it right and make 30 to 35%, and then the few times you don't get it right, you only lose 8%, that math works. Now, that's just a simple illustration of how we get the math on our side. But let me tell you what ruins it. Let's say you get into that play at a perfect buy point. It just bounces up off support. You jump in and you buy the stock. And it goes, and let's say that the range from the support line to the resistance line is $5. Every time it moves up $5, it tends to bounce back down. Well, let's say you jumped in at the perfect buy point, and all of a sudden that thing just moves up $3, and you say, you know what, $3, I got 1,000 shares, so that's $3,000, that's good. I'm just going to get out and take the money. And so it made it maybe a little over halfway up that range, and you sold it. Well, why did you sell it? Well, that could be greed, because you just want to put the money in the bank. It could be pride, because you don't ever want to have to tell anyone that you got it wrong, so you're going to jump out while it's still moving up. Or it could be fear. You're jumping out because you're afraid it's going to go down before it gets to the resistance line. Even though in the past it makes it to that resistance line every time for the last 5 times it's done this. you still get fearful and you sell it too soon. So the point is if you sell it halfway up that range instead of all the way up, now you're not winning 30% or 35%. You're only winning maybe 12%, 15%. But when you lose, you're losing 8 to 10%, which means you're kind of winning and losing at the same amount. You can't make money that way, especially over a 3-year period. You're probably just going to break even at best. And you're probably going to end up losing money doing it that way. So what's the point? You got to make a rule. Here's your rule. You say to yourself before you get into play, okay, I'm going to set my stop out at 8% below the place where I buy it. And then I'm going to set my sell point just a little bit below the resistance line. And then I'm not going to get out of this play till it hits one of those two spots. Now, why is that a good rule? Because you got to remember it's never going to go in a straight line from your support line up to your resistance line. It's going to go up and down maybe for 2 weeks. And if you're watching that thing on a 1-minute chart, you're going to think it's just totally losing it when it makes a little bitty move down. And you're going to tend to get fearful and just hit the sell button. And it will ruin your math and you can't make money. So one of the rules is don't watch the 1-minute chart, because what you need to do is set your stop loss and then set your sell point and then don't do anything unless it hits one of those two. All right, now the reason that math doesn't work, remember, it's because if you get out too soon while you're still moving up that channel, maybe halfway up, you're only going to win 12 to 15%, and your losses are supposed to be 8%, but sometimes they're a little higher, it could be 10%, and so then your win rate and your loss rate's almost the same. That's a break even. You're not making money. You're breaking even at best, and you're paying commissions, so you're losing money. So you have to let the stock move all the way up the range and don't get out early. The best way to do it is to set the stop out point and to set the sell point before you get into play and then do nothing. Just let it do its thing. I mean, if it moves down and stops you out, that's a good play because that was your plan. If it moves up and hits the sell point, that's a great play because that was your plan. And that makes the math work. Now, there is one exception to the rule. And this is difficult for beginners though, so be a little bit careful. But remember, with TRADEway, if you go out to TRADEway.com and take advantage of almost any of our systems out there, you're going to have included a thing called a market alert. And that's where we're talking to you about the market tone. So the exception to the rule is if there's something very drastic out there in the news, either the world news or the economic news, that makes it impossible for your stock to go all the way up to the resistance line, then you're allowed to sell it early. Take what little profits you have and get out of the thing before it tanks. But you got to be careful with that as a beginner because sometimes news is fake news out there, and it's not even the kind of news that'll actually affect your play, and you'll get out early, and you don't need to do that. So make sure you read the market alerts and let those of us who have done this a long time help you with that part. So the general rule is you just don't get out unless it hits your stop out or your sell point. And that takes care of your emotions, just kind of rules them out. I mean, they're still there, but they don't affect your play because you don't allow them to. And it gets that math on our side because you're going to win at least 30, 35% if it goes up and hits that sell point, and you're only going to lose 8% if it hits the stop out. The math works. So those are the reasons why you need good buy points. Now think about it. If you got in a little too late and that stock had moved up from the support line, maybe a third of the way up into the range, and then you buy it, now it's not possible for you to make 30 or 35% because it's already gone up 10%. So you're only going to make 20%. The math isn't going to work right. Another reason bad buy points don't work is because if you buy too late, it makes your stop out lose more money. So that's the other side of the coin, but it still hurts the math. That's plenty of reasons for you to tell yourself, don't let myself get bad buy points. You need to make sure it just bounced up off that support. If it's too late and you missed it by a day or two, just skip it. Guess what? It'll roll again in 2 or 3 weeks. Just wait. Let it come back down. Catch it the next time. Or go out and find a different stock that's doing it right now and it's at the right buy point. So there's a great lesson for you on why you can find good buy points, good sell points, and why it's important to get it as close to perfect as possible. And for those other patterns, go out to TRADEway.com and just check out the education tab. You can learn where the perfect buy points and sell points are for each of those patterns. Really important to know. Make yourself some rules and stick to the rules while you're in the play, and then that's what makes the math work. All right, guys, if you like the show, please rate and review it, and that way other people with similar interests can find it. We can be a help to them. I hope you enjoyed this, and more than that, I hope you'll employ it, because it'll change your trading life. Even though it's simple, it can make a huge difference. All right, we'll see you next time.